Our next panel, I think a lot of you will definitely relate on, is about the India Fintech Story. For this, I'm going to invite on stage our moderator. Please give a huge round of applause for the head of commercial banking, Stride One, Mr. Arvind Nachaya. Please give him a round of applause. Mr. Arvind, welcome on stage. How are you doing? That's your mic. Just a quick question. This is not much of a secret. Every time my cousins are visiting from abroad, when they look at our UPI infrastructure, for the first time I feel like we are Wakanda because they're so far behind and we are so far ahead. I'm very excited to actually look at what exactly is going to be discussed today. Anything that you want to tell?
I think India is in this transformative journey, especially on the digital landscape, right? We've seen just so much of change, and you rightly said, and most people come from abroad, especially our own NRIs, when they come into India and they see that you can live your life in most large cities without a rupee in your pocket, with your mobile phone. So I think that journey has been amazing.
It has been incredible. Please give a huge round of applause, and we're about to start the panel. Over to your
Thank you.
more efficient hands.
Thank you. I'd like to invite Ms. Zareen Daruwala from Standard Chartered Bank. Zareen is the Group Cluster Chief Executive Officer of Standard Chartered India in South Asian markets. There's no introduction. She's been a veteran banker for over 3 decades, covering both the Indian banking scape and more recently in the MNC space. I'll also like to invite Mr. Jaspal Bindra. There's no introductions to Mr. Bindra, a superstar in the banking world, led Standard Chartered Asia, and now more recently the founder of Centrum and chairman of Centrum, also building out Unity Bank, which is a digital-first small bank. I'd also like to invite Mr. Sarvesh Singh, who's the joint CEO of Policy Bazaar. I think one of the leading digital distributors of insurance in many India-first innovation on the insurance tech side. Also, Mr. Madhusudan, M2P Finance, Fintech, who's in many ways one of the the companies that have underpinned a lot of our transition in this whole digital journey. So welcome to all of you all. Just a quick question this is a question to the entire panel. How has been the evolution of the Indian fintech industry, and how has our journey been vis-a-vis the world? Ma'am.
So I think I would say it's been 4 phases of the whole digital journey. One is the early 2000 where we had RTGS, NEFT, etc. that came. The second was the mobile banking and wallets where we had Paytm, MobiKwik, etc. I would say the real rapid expansion was 2016 to 20, demonetization, forcing a lot of people to go digital. And I think the fintechs really capitalized, to my mind, on that period. And of course, the government infrastructure, whether it's the whole digital stack or the Startup India, Digital India, etc. So that clearly was, to my mind, the takeoff phase. And now we are seeing post-COVID, obviously, far more adoption. And now we are seeing newer technologies, etc. coming, and neo banking, digital banks. For example, Standard Chartered has set up 2 digital banks. One is in Singapore and one is in Hong Kong, which are pure digital banks, Mox and Trust. So we're seeing a different trend now happening. And I would say future really, one would see more and more, at least in India, more and more financial inclusion, focused innovation, and what we also will see, what Nandan and Nilekani has been talking of, is the Finternet, which is something that one will see play out in the next few years, plus the whole central bank digital currency, the whole INR internationalization, etc. So I would say that, yeah, broadly, that's been the journey. Yeah.
So what about you, sir?
We all know that fintech is here to stay. I think the reasons behind that are also very obvious. First, there is the rapid revolution from technology, which is making a lot of things happen in the financial world. But even more importantly is the consumer demand, which is looking for convenience, choice, speed, which will continue to foster fintech for a long time. I think not only is fintech going to have a big boom in this world. Today, already fintech industry is growing 3 times that of the banking industry. But the fintech industry is shaping the future as well, because the way individuals and businesses now handle their money and transact their business is also getting dictated by fintech. So it's a convergence in many ways. So yes, I think fintech is here to stay and prosper.
Sarvi, how do you see the evolution of fintech? Also, more importantly, in the distribution, as this moves into the hinterland and it needs to go well past the top 20 cities, how do you see this evolution? How has it happened in till date, and what are your thoughts on that?
Before I begin, I must say that this is a very surreal moment for me. And if you will indulge me for a few minutes, when Ishpreet met me in 2019 for the first time, I had no idea that we would reach where we have. So I just want to congratulate you, Ishpreet, and the team for such an amazing thing to have a session. And for me, personally, it's a matter of great privilege to be on the same panel as Mr. Bindra and Daruwala. I don't think I would have had a chance to meet them but for you. So I do, again, heartiest congratulations to you on your success, and I'm sure many more years ahead. Coming back to your question. Fintech, first of all, I think in 2024, there is no concept anymore of fintech. I think every financial institution has to be technology oriented, and obviously people who are using technology have to decide which area they want to, focus on. So I think everyone by definition is now a fintech if you are in the financial services world, right? And we've seen that in the last 1 year, just the RBI actions have shown you that, focus on technology is super important. I think the second thing is that there are two parts to any financial services situation, right? One is the manufacturing and one is distribution, right? So whether there is innovation, I think applying technology is part for the course now. Now the question is, what is the innovation that you're doing both on the manufacturing side and on the distribution? And what we see on the insurance side, because that's what we do, is that today, 5 years ago, 2/3 of our business used to come from the top metro cities, right? So 7, 8 cities, let's call it that. Today, 2/3 of our business comes from outside of those 8 metros, right? And if you look at the scale, obviously our scale over the last 5 years is about 3.5 times what we were 5 years ago. So the scale has gone up, and yet the contribution has also gone up. So this whole revolution that we have with, literally 600-700 million Indians with smartphones, data access and all, they are putting that to good use, right? And they're learning. So it's not just financial services, because they are ordering stuff from Flipkart or Amazon, or because in some cases they may be buying groceries, obviously doing their financial transactions. They are willing to now experiment. So what we find is, and I think COVID was helpful in that now there's a whole variety of people for whom, buying online is acceptable. In fact, I find very surprisingly that many educated people seem to have a problem with it. They still feel that, nay, if I don't meet somebody, how can you, transact? But a lot of people for whom this is a luxury, right? They didn't have anyone to meet. They are quite happy to come to our website, our app, and transact. And of course, you have to manage the journey. But I think it's really taken root. It's a very democratic part. And at least on the distribution side, I think there's a lot of innovation going on.
Madhusudan, how have you seen the innovation, especially from the data piece side, and as you integrate technology, like Sarvi was talking about, that every organization needs to now move from just looking at their own data, but looking at consolidated data, looking at DPI, looking at the whole evolution of DPI. How do you see that?
I think just to sort of take a leave out of what he just said, right? We have a stated mission to actually make every company a fintech. So our reason for existence is to make sure that the technology is put to good use and inclusion is sort of driven. And we've been around for 10 years, so we've kind of seen this wave where fintech as a buzzword didn't exist. So our, at our, infancy, it was about getting banks to work with businesses and trying to see if we can get products out to the market faster, cheaper, better. And we have seen this transition where 5 years back, the relationship between a bank and a fintech was more of a frenemies, right? Where selective experimentation used to happen. Now there is a lot of embrace that's happening where, you actually want to slow things down which is what the regulator is also saying. You should get technology, but at the same time, just have your checks and balances in place and make sure that it just doesn't go overboard, right? So we have gone from despair to exuberance in a 5-7 year period, and for an industry to actually get to that in such a short span of time is what Stride's growth has been in the last 5 years, right? So we are very excited. I think we believe that there's massive potential for fintechs to sort of play a role. But the India ecosystem is very different to just the way globally fintechs operate because of two reasons. One, globally, if you see fintech, it kind of operates at a point where it's solving for very foundational challenges. Your bank account opening is broken, your money transfer is broken, you can't send money, efficiently, and so on and so forth. But in India, we already solved for some of that. You can't make money movement more efficient than what we have today, right? It's instant, it's almost free for the consumer. It's actually free for the consumer, and it's really fast and scaled. But when you look at what fintechs can then solve for, it's actually second order effects or what the next wave of action and innovation that can happen, right? Therefore, globally, when fintechs are solving for, how do I make a better looking app and a digital bank, we actually solved for that 5 years ago, right? So and at scale, in several of the markets that we operate, joke that to the banker or to the regulator that most of your the base of customers to whom we have to address to is probably a small fraction of what our largest customers would have, right? So several of these countries are in tens of millions in terms of users, right? So therefore, a lot of the world is today looking up to India in terms of what fintech action is going on here, and this, and just the factor that the public good infrastructure that we have built out, more broadly as a as an economy, is actually fueling that a lot of that growth.
Ma'am, I just want to pick up from what Madhu was talking about in terms of innovation trends. So, from a larger financial institution perspective, how do you see what trends, what are the kind of innovations that you see are happening as we go along this journey?
I can share a little bit about what we in Standard Chartered Bank are doing. So, first is open banking. We share our APIs, we invite developers, etc. And we have 2 billion API calls annually. So that's the volume that we are doing. Standard Chartered India is a big contributor to that volume. The other thing is on retail, we've hosted 57 APIs where again people can we can co-work with a lot of the fintechs, etc. On the Gen AI side, we have in dialogue with ChatGPT and WhatsApp, etc. And we are looking at how to use WhatsApp for selling, and also working on how to use AI in different parts, like, for example, marketing. How do we do more hyper personalization? Customer servicing, and in fact, we're using AI in our internal talent marketplace, what we call, where somebody applies, matching the role with the person's capabilities. All these things we are already using even for our internal work. And on risk management, for example, something that is very particular for foreign banks is sanction screening, etc. A lot of technology is being used, and a lot of it is backed by AI. So that is something that we do. In terms of the corporate banking side, in Singapore, what we've launched is a partnership with Pateer, where along with DBS, JP Morgan, and Temasek, we're working on an end-to-end disruption of payments, clearing, FMI, and capital markets. That's in Singapore. That's happening. And it's a rail. It's not going to create products, but it will facilitate movement of distributed ledger technology with products like tokenized deposits and CBDC. So that is something that we are working on. In India, on the corporate side, what we've launched is two products for our importers and exporters. It's a one-step import solution where everything is reconciled because otherwise a lot of people who are importers and exporters would have experienced the RBI's IDPMS and EDPMS, there's a lot of unreconciled issues, and then there's blacklisting of clients. So we worked on a one-step import solution, which is something that a lot of our clients are appreciating. And same as for exports, where, the bills and the receivables are all auto-reconciled. So that is something that we've done. The other thing that we've done in Stanchart India is payment as a service, where people can build in efficiencies in their accounts payable. And we're also working on, like other banks also, on how do we improve our whole SME lending by using GST, etc., the records which a lot of banks are doing. The other thing that I mentioned earlier also is hyper personalization on our retail banking using real time interaction management. So many things in the works that we are.
It's very interesting, and to bring to your point, Sarveer, is that look at the so-called old age banks transforming themselves. We always use fintech, and the image that comes to our mind are youngsters starting up together to build something new. But it's amazing to see how the industry is transforming. And to your point, Madhusudan, I hope this answers second order business, right? I hope this whole new way of thinking is to move from just focused on giving products to customers to more bringing it, how do you use it, how do you manage it, how do you deliver it, how do they consume. Mr. Brinda, to you, how do you think about the perception of global markets, global players, vis-a-vis our own fintech industry? How have you seen that, and has it changed over the last couple of years?
It has changed dramatically over the last several years, and it's extremely positive, as you would all guess. Clearly, that's on account of many factors. So, first, the adaptability of the adoption of fintech in India is probably the highest in the world. Madhu can probably give you the right number, but it's upwards of 80%, I believe, whereas the global average is in the 60 odd percent. 40% of all digital transactions happen in India by number, 40% of all. So clearly, India is a leader on the map. The fintech industry has evolved considerably. The funding deals that have happened in India in the recent years have overtaken China. So it's obviously now the largest fintech market in Asia. And some very good reasons for all of that, because firstly, I think the India stack, as Madhu had just mentioned, everything from Aadhaar to eKYC to e-authorization to DigiLocker, everything of that. India infrastructure now in the digital space is being exported to developing countries. So obviously there are beneficiaries out there in the world who are applauding and accepting that import. And I think the kind of foreign wealth, foreign capital that has come into the fintech is obviously both a sign of the fintech sector in India, but also now a skin in the game for foreign capital in this place. And I think that foreign capital has not just come into fintech, but it's also now coming into the software as a service, what Madhu is doing, distribution as a service, and soon there'll be banking as a service, I think on a bigger scale. Some of these industries are getting, these individual sectors are getting $5 billion worth every year. So clearly on every count, I think it's a very positive perception globally.
So also, given that, as you mentioned, we are the largest in terms of digital payments, how are regulators in India approaching this vis-a-vis the foreign regulators, typically in the overseas market?
We have to be always careful when you are in a regulated industry to answer anything related to regulators. But let me say that, India has adopted and practices for a long time now a rule-based regulation. Rule-based regulation has many advantages because there's a lot of codification, is very prescriptive, etc. So for the market players, there is no legal ambiguity. We know what the rules are. You have to follow the rules. From a supervisory regulatory point, also it's very clear, and there's very little discretion. They have to follow. But obviously, the sophisticated players and fintechs count within them can actually push beyond the edge without violating the law in a rule based situation. And that obviously creates some challenges. The other thing that is there in the rule based regulation is that the supervisor has to be very, looks at the minutiae because they have to look at rules by the book, etc. But the biggest problem of rules based regulation, and this is what most of continental Europe and to a large extent the United States also follows, the biggest challenge is that it inhibits innovation. And I think the alternative to rules based regulation is the principles based regulation, which is obviously less codified, less rigid, less prescriptive in that sense. It's mostly based on practice and precedents of the past. And what happens in principle based regulation, as most of you would know, is really that the promoters and managements of financial services companies have to be accountable for the activities and their business, not just for the law as in the book, but also for the intent and spirit. So it has its challenges, but it does the biggest advantage of principle-based regulation, which the UK actually started in 1997 and has successfully followed through. And Zareen and I both have been subjected to that because we were in the same. I was in the same institution as her once, and we were subjected to the UK FSA. So they have brought it under PBC, and they have a slightly different approach. But when you talk about India's regulatory environment as seen from the outside, it's a huge plus because only 2 months ago, to the date almost, the Indian regulatory framework has been voted upon by the global regulators. And this is for banking BIS and for capital markets, what we call IOSCO, but IOSCO, it's a long name, something like the Noida Okhla thing. They have both ranked India, which is RBI and SEBI, ahead of the US and China. So we have been ranked on a ranking scale of 4 as 4 out of 4. And the definition of 4 out of 4 means that your regulatory framework is fully in force. That's the real definition. So clearly, whichever way you look at it, the Indian regulator has come of age. I think we've climbed the curve very steeply today, whether it is a settlement process, it's a level playing field, it's the, investor interest, depositors' interest, very well protected.
Sarbir, as we go ahead, and we spoke about it in the beginning, in terms of how do we move from here, from the top 15 cities down to the next 50 cities, distribution would play a role, investor education would play a role, consumer education would play a role, and more so for the products that you all deal in, also coming of age of how we consume a lot of these products. And from the insurance perspective, with COVID, also has been a sea change in the way people think about risk, think about their lives, think about their products and their businesses. How do you see that? And also, how do you look at Policy Bazaar as an organization working towards building out that infrastructure?
So I would say that we are pretty deep. We are present in, I think, 250 cities in the country. And I couldn't name 250 cities if I tried to. So the fact is that at Policy Bazaar, at least, we have embraced the whole operational complexity of working in India, looking at the banks as as an example that if they have to do, if they need to open 3,000-4,000 branches a year, then we should not hesitate to, open, offices or have people in different places. So what we are trying to do is that we are trying to combine the best of both worlds, which is that you come to policybazaar.com, you can see the products. Insurance is actually a perfect digital product because nothing happens, right? When you buy insurance, there is no physical manifestation of it. All you have to do is you get a PDF if everything goes well, right? So it's a promise. So the promise can be delivered digitally very easily. And what we are trying to do is that still the Indian customer, and I think from what I understand, customers even abroad, they would like to meet people. So it's not that, they are happy to just do everything online. So we provide that capability. So people living in Gurgaon, they may not want to meet anybody. This audience may feel that what is the need for any meeting? We can just do it ourselves. But I promise you that if you go a few kilometers from here only, forget about the mythical tier 2, tier 3 city. You just have to go 2 kilometers from here. And there are people living with money who want to buy insurance, but they prefer to meet somebody or talk to somebody. So what we are trying to do is to be available everywhere. And what we believe is that I think this is probably true for all fintechs who want to scale and have a significant impact, that you will have to go there. You will have to have both physical capability as well as digital capability. And I think the trick lies in marrying the two things. See, because we have to be efficient. We have to be the lowest cost producer in our industry, because otherwise there's no point. I mean, then there are people who are better than us and they will, frankly kill us. So we have to be the lowest cost producer, but we have to, make these choices. And like I said in the first part, India is well beyond top 8 cities. I think now large parts of the country are very much on board. Of course, we are a big country. There are, everything that you can say about India is true and false. So everything is there. I would not want to, over dramatize the issue. It's a tough market. There's ticket size is small, cost to serve is high. So it's a tough market. But I think you have to keep going. And we all hope that, 10 years, 20 years, 30 years later, the numbers will start adding up more and more. But that's how we see it.
Uh, Madhusan, as you think about, and we spoke about the globalization, we spoke about MNCs, Indian fintechs, all of them evolving, developing, putting together products and solutions, coming at it from a different perspective, right? From a tech perspective. How do you see our own financial infrastructure tech companies, right, building out UPI and so on and so forth, and various other tech? How do you see that playing out as us supporting global companies, in a sense, exporting our technology, exporting our product suite? How do you see that evolving?
Sure. So, I mean, there's a big secular shift that's happening more so in the last 5 years, where if you just take a very simple product that we all use, credit card. Credit card came from the US. The reason why 45 days of credit period is there is because in the US you get paid every 15 days. It was 3 pay cycles. You can pay back whatever you spent on. That product just flowed to all parts of the world, where the local nuances never actually got fed in, right? You don't get paid 15 days. You and I don't get paid in 15 days. So there has been this product adoption from the West that has played for the last 30, 40 years, where we have not questioned the fundamentals of why this product is structured in this fashion, right? For right or wrong reason. What we are seeing different that play out, and also to my earlier point around we solving for second order effects, is the fact that we today have a new crop of businesses that are basically saying, I can serve at scale, opportunities that are slivers of, one fraction of a business model. If I take SME lending, I can just solve for how can I underwrite a particular customer cohort, very well. And that idea can actually get ported to any other part of the world. So what we are doing for a bunch of banks in India, we're also doing for a digital bank in the Philippines. The same, small SME, they're called differently, called sari stores, but fundamentally it's the same, right? At the very, very operating level, most of these products are commodity, right? Like credit card works exactly the same way, whether you're in the US, Indonesia, India. But what are the cultural nuances? How can you actually wed that into the data interplay that's there in the market? So India's far greater adaptability of digital public goods. So therefore, we have a lot more at our fingertip, where you can virtually give out your last 3-year bank statement in just one click and one OTP, right? So that's where we are. While in some other parts of the world, including US, you still need to have a lot of that paper that needs to go out for somebody to decision on your credit, right? So therefore, highly likely that markets will move towards digital, and therefore we are actually moving forward. So India will become the fintech factory for the world in the foreseeable future. That's how we see it.
It's just been an enlightening conversation to just look at how we've transformed our own industry and how we are charging ahead. Just a final few thoughts from the panelists. As you look ahead, what trends are you seeing, and how do you think about this whole financial industry, the fintech industry, and and maybe, if possible, uh, years of work and wisdom, for some of the fintech people who have come in here. What advice would you give them as they build out their own organizations?
So I think I'll stay with the advice bit. I think it's very important to plan for contingencies, and we've seen enough and more cycles. If you look at demonetization, we saw that breaking the back of a lot of people. We saw COVID. So I would say financial prudence, very, very important as for any startup or any fintech or anybody, including a bank. We have to, so every industry, every company, every fintech has to plan for that.
So I believe there will be more scrutiny and regulation on the fintech sector. I think compliance and security will remain a challenge. It is a challenge today, it will remain. The good news is that a lot more foreign capital will come into this sector. To me personally, there is one humongous untapped opportunity in fintech, which is cross-border payments. And I think that is the big opportunity waiting to be unfolded. And of course, I have to say AI holds a lot of promise.
Yeah, I would say that robustness. I mean, if you are building out a company, see, earlier in India, if you gave money to somebody, that was good enough. It was, people were very satisfied, you have given me the money. Now the expectations of the Indian customer are going up very fast, because they are used to WhatsApp and they are used to Zomato and Uber and all these things. So I think build robustness. It is not, you can't say that I'm a startup, so the robustness will not be there. And the challenge in financial services is that you are dependent on other people also. Typically, like for us, we are dependent on, our insurance partners. So you will have to build that robustness and redundancy into the system such that you can handle those situations, because you can't turn around and say that my partner did not, their API didn't work or whatever. So I think that robustness is a critical thing that I feel is now important for you to build a business. And without that, you will not go very far. So it's something that you should really start thinking about deeply.
Two things. I think you asked Mr. Bindra about regulation. We are not a regulated business, so I can talk more freely. I think what has changed in the last few years is that what was not in the regulation was probably an yes. Today it's an absolute no, right? So people have figured that there is no longer reading between the lines that can fly. So that most founders have realized that that cannot be the order of the day. That's one part. The second is, and more understated, at least in the financial services space, is that level of tech disruption that AI is bringing in with respect to, I think Am spoke about it a bit, hyper personalization, how you can underwrite better, how you can predict somebody going defaulting at an individual customer level and not at a cohort level, is all going to just go through the roof, where ultimately we'll be able to serve the customers in a more economical way, where the cost benefit can actually go back to the customer. I think if I have to crystal ball 5 years from now, we are actually underestimating how much AI can actually change banking and the way it can actually serve at least the consumer banking space, in a meaningful way.
Thank you so much. Thank you to you all for participating in today's event, and I hope all of us have learned a lot. I think the advice is very, very important, and for us to, as a part of Stride One, it's important as we build out our own business in the enterprise funding side. I think we are also solving for second order, not just trying to solve for lending, but how do we make it hyper personalized? How do you look at data? And thank you so much. Thank you for your wonderful.